Hello everyone and welcome to Crypto Chris YouTube channel. Today I want to address a question that's been frustrating many Bitcoin investors. Why is Bitcoin's price underperforming? But before we start panicking, let's be clear. Bitcoin's network is running flawless. Transactions are cheap, miners are actively mining, and there is no censorship or technical issues. Everything is working exactly as it should, except for one detail: Bitcoin's price in fiat terms. When measured against its biggest competitor, the US dollar, Bitcoin hasn't doing so well lately. Let's break it down. If we overlay past cycles, the trend is clear. We have had 4 halvings so far. 2012 is purple line, 2016 green line, 2020 blue line, and 2024 black line. And guess what? 344 days after the 2024 halving, Bitcoin's price is severely underperforming compared to all previous cycles. Let's put that into perspective. If Bitcoin had followed the 2012 trajectory, we would be at 1.1 million per Bitcoin right now. The 2016 cycle suggests we should be around $235,000 and 2020 cycle a 418,000 per Bitcoin. Reality check, we are nowhere close. Even if you assume diminishing returns are thinning, which they are, the current cycle's price action has been especially disappointing. And if you think that's bad, the 4-year compound annual growth rate, which suits out volatility, has dropped to historic lows, hovering around 133%. That's not what bulls wanted to see. So what's going on? Why is Bitcoin not behaving like it should? One possible explanation is that macro factors are dragging Bitcoin down. Right now, global uncertainty is off the charts. We got Trump's tariff wars, geopolitical tensions shifting alliances, and a general feeling that no one knows what's coming next. Is Europe still a reliable US ally? What's happening in Asia? Where does the world stand on Bitcoin regulation? On top of that, Trump and Elon Musk are both pushing for drastic government spending cuts. Now, don't get me wrong, I think that reducing reckless spending is a great thing, but slashing government expenditures can slow down GDP growth, and like it or not, markets, including Bitcoin, react to that. So as a part of so-called dodge costing at the federal level, the US government is spending less, at least in theory. The big question is how much will actually be saved. Here's the issue. Government spending is a component of the US GDP, and yes, it's a ridiculous system, but here we are. So when spending drops, GDP can shrink. And if GDP contracts for 2 consecutive quarters, congratulations, you're officially in a recession. Markets, including Bitcoin, are forward-looking. If a recession is on a horizon, investors start repositioning early. That could explain why Bitcoin, along with other risk-on assets, has been struggling over the past year. First, let's clarify some financial jargon here. Risk-on assets are things that boom in bull market but get dumped in a crisis: stocks, Bitcoin, speculative assets. Risk-off assets are things that hold steady or rise when the economy tanks. Historically, US Treasuries, gold and cash. Traditionally, US bonds have been the ultimate safe haven, but with government spending out of control and debt to GDP ratios soaring, even treasuries aren't looking so bulletproof anymore. Now, logically, Bitcoin should be the ultimate risk-off asset. It has zero counterparty risk, can't be diluted, and doesn't rely on some central bank's money printer. But the market still hasn't caught to this idea, which is why Bitcoin keeps moving in sync with risk-on assets like tech stocks and the NASDAQ. Speaking of which, NASDAQ has been sliding for the past month, and part of the reason might be Trump's new America First investment policy. This policy, released on February 21, 2025, puts stricter regulations on Chinese investment in US companies, which has led to Chinese capital fleeing US tech stocks. Funny enough, Bitcoin's latest leg down just started. This memorandum was published, so yeah, Semen definitely had a heads up. Before we continue with the video, I want to let you know about a new opportunity on Binance. Blockchain gaming is leveling up and GUNZ is leading the charge. Built by Godzilla Games, GUNZ is a layer 1 blockchain designed for gaming, powering off the grid. A battle royale that topped the Epic Games Store, even beating Fortnite. The game won the Game of the Year award in the 2024 on Game 3 Awards and is already live on PC, PlayStation 5 and Xbox Series. Now, Binance has announced GUN as its latest launchable project. Starting March 28, users can farm GUN by locking BNB, FDUSD, or USDC, and trading goes live on March 31st with multiple pairs, including GUN USDT and GUN BNB. This is a major milestone, and Binance will be the first exchange to list a GUN. The GUNZ ecosystem is already seeing insane adoption, with 14.5 million plus unique wallets and 480 million plus transactions proceeds. The GUN token fuels everything from validator rewards to NFT transactions and in-game purchases. And with backing from Delphi Digital, OneEck, Coinbase Ventures, Animoca Brands, and even Twitch founder Justin Kan, this project has serious weight behind it. If you want to get in early, check out the Binance launch pool, and if you don't have a Binance account yet, you can sign up using my referral link in the description. Another question many people are asking is who is selling Bitcoin? If Bitcoin is such a powerhouse, why is the price struggling? After all, we have seen banks, corporations like MicroStrategy, now just Strategy, and even nation-states accumulating Bitcoin. Well, there is always the other side of the trade, sellers. Are early whales finally cashing out after a decade of hodling to buy mansions, yachts, or private jets? Or is it just the retail investors with weak hands taking profits at the first sign of a trouble? Probably a mix of both. As of March 26, 2025, Bitcoin short-term holders are under increasing financial pressure, but beneath the surface, long-term whales are accumulating. It's a classic battle of conviction versus panic. If we look at the 2024, there was an interesting report from River on Bitcoin ownership changes. Here's what it showed. Funds and ETFs, mainly the BlackRock Spot Bitcoin ETFs, and businesses, mostly Strategy, formerly MicroStrategy, bought nearly 900,000 Bitcoin. Individuals, on the other hand, sold off 525,000 Bitcoin. Governments offloaded another 62,000 Bitcoin. The other category includes Bitcoin yet to be mined, Bitcoin held in smart contracts, estimated lost Bitcoin, and various other changes. So what does this tell us? Retail investors have been dumping their Bitcoin while institutions, corporations have been scooping it up. Great for them, not so great for the individuals selling, who may regret it in a few years. This shift in ownership distribution is another potential reason for Bitcoin's weak price action. And then there is a third reason. There may be no real reason at all. Bitcoin doesn't have to follow a script. There is no law that says the Fourier cycle must repeat perfectly every time. Sure, we expect diminishing returns over time, but the cycle isn't set in stone, especially now the block rewards have dropped from 50 Bitcoin per block in 2009 to just 3.125 Bitcoin per block after the 2024 halving. Some argue that halvings matter less and less and the subsidy shrinks. Others say that it does matter because of the self-fulfilling prophecy. Traders and investors expect price surges post-halving, so they act accordingly. But again, there is no rule that says Bitcoin must move in predictable cycles. It could enter an extended bear market or an extended bull market or both at once, depending on your time frame. The more people expect a certain pattern to play out, the higher the chance it won't, because the market adapts. This is something I've been first-handed in trading. Once a strategy becomes too obvious, it stops working. And that's why trying to perfectly time the Bitcoin market is a fool's game. Instead of obsessing over short-term price movements, the best strategy remains DCA, dollar cost averaging, just buying a fixed amount at regular intervals no matter the price. Checking Bitcoin's price 10 times a day, I get it, we're all guilty of it sometimes. But it's about as irrational as checking your house value on Zillow every hour. It makes no sense for a long-term asset. And honestly, it's probably just a dopamine addiction at this point. At the end of the day, Bitcoin's fundamentals remains unmatched. So I'm going to keep accumulating, and I hope you do so. Of course, it's not a financial advice, it's just my own thinking. Bitcoin will make it moves, and it's a good and ready. And that's the big picture. Bitcoin may not be following past cycles perfectly, but that doesn't mean its long-term trajectory changed. Whether macroeconomic changes or shifting ownership dynamics are to blame, one thing remains clear. Bitcoin's fundamentals are strong as ever. So instead of stressing over short-term price swings, the smartest move is to stay focused, keep stacking, and let time do the work. If you enjoyed this breakdown, don't forget to leave a like, subscribe, and hit the notification so you will never miss another update. Also, let me know your thoughts in the comments. Thank you for watching and I'll see you in the next video.